What if I told you that you can legally pay zero taxes in Europe? In this video, we reveal 3 hidden loopholes that governments don't advertise. From Malta's global domicile program to Estonia's e-residency, these strategies are used by smart investors and digital nomads. Stay until the end, because loophole number 3 will blow your mind.
What if I told you that you can legally pay zero taxes on your foreign income while living in a beautiful Mediterranean country? Let's dive into Malta's global domicile program. This program is designed for individuals who want to become tax residents in Malta without being taxed on income earned outside the country. Here's how it works. First, you need to spend at least 183 days in Malta to establish tax residency. Once you're a resident, any income you earn from outside Malta, whether from investments, remote work, or rental properties, is completely tax-free. But why would Malta offer this? Well, it's their strategy to attract high-net-worth individuals, digital nomads, and retirees who can contribute to the local economy. The application process is straightforward. You'll need to provide proof of income, a clean criminal record, and evidence of health insurance. Malta also offers a high quality of life with its stunning beaches, historic cities like Valletta, and an English-speaking population. Now let's talk numbers. Imagine you're a software developer earning $100,000 a year from clients in the US. If you become a tax resident in Malta, you could save up to $35,000 in taxes compared to living in a high-tax country like Germany. Plus, Malta has double taxation treaties with over 70 countries, so you won't be taxed twice on the same income. However, there's a catch. You must avoid becoming a tax resident elsewhere. This means managing your travel days carefully. Also, Malta does tax local income. So if you earn money within Malta, you'll pay standard rates. But for anyone with international income, this program is a golden opportunity. In fact, many entrepreneurs and investors have already moved to Malta to take advantage of this loophole. Next, let's talk about Bulgaria, which offers the lowest corporate tax rate in the European Union, just 10%. If you set up a company here, you can enjoy this low rate on your profits. But that's not all. Bulgaria also has an extensive network of double taxation treaties with over 70 countries, including the US, Canada, and many in Europe. This means you can avoid paying taxes twice on the same income. For example, if your company earns revenue from a treaty country, you can credit the taxes paid there against your Bulgarian tax liability. The process of incorporating a business in Bulgaria is quick and straightforward. You can establish a limited liability company, LLC, in about a week with minimal bureaucracy. The required capital is very low, just 1 Bulgarian lev, which is about 0.50 euros. You can do this remotely by working with a local lawyer or agency, making it accessible for foreign entrepreneurs. Additionally, Bulgaria has one of the lowest costs of living in the EU. Cities like Sofia and Plovdiv offer a high standard of living at a fraction of the cost of Western European capitals. For instance, rent for a modern apartment in Sofia can be as low as 300 to 500 euros per month, and daily expenses are very affordable. This makes it an attractive base for digital nomads and freelancers looking to maximize their savings. Many IT freelancers and entrepreneurs are already using this loophole. Imagine you're a freelance software developer earning 100,000 euros per year. In a high-tax country like Germany, you might pay up to 45% in income tax, leaving you with only 55,000 euros. But in Bulgaria, with the 10% corporate tax and favorable dividend policies, you could keep around 90,000 euros after taxes, saving 35,000 euros annually. That's a huge difference. However, it's important to comply with Bulgarian regulations, such as filing annual returns and maintaining proper accounting. With the help of a local accountant, this is manageable. Personal income tax is also a flat 10%, and dividends are taxed at 5%, so the overall tax burden remains low. In summary, Bulgaria offers a compelling package for businesses: low taxes, double taxation treaties, easy setup, and low living costs. It's no wonder many smart investors and entrepreneurs choose Bulgaria for their European operations. Finally, let's explore Estonia's e-residency program, a game changer for digital entrepreneurs. This program allows you to establish and run a business online without physically being in Estonia. The best part? Corporate profits are taxed only when distributed, meaning you can defer taxes indefinitely. This is known as the territorial tax system and is perfect for growing your business tax efficiently. Estonia's e-residency program is open to anyone in the world. You apply online, and once approved, you receive a digital ID card that gives you access to Estonia's business environment. You can incorporate a company in hours, open a business bank account, and manage everything remotely. Over 100,000 people have already used this program to access the EU market. The tax benefits are significant. Since profits are taxed only when you pay dividends, you can reinvest earnings without immediate tax burdens. The corporate tax rate is 20% on distributed profits, but if you never distribute, you pay zero corporate tax. This allows for massive growth potential. For example, if your company earns 200,000 euros in profits, you can reinvest all of it without paying corporate tax until you take dividends. Estonia is also known for its advanced digital society. Everything from voting to banking is done online, making it incredibly efficient. The cost of running a business is low, with minimal bureaucracy. Plus, as an e-resident, you can join a global community of innovators and access support networks. However, there are considerations. You'll need to comply with Estonian reporting requirements, which are mostly online. Also, while you don't need to live in Estonia, you must have a local address for registration, which can be arranged through service providers. Personal income tax may apply if you are tax resident elsewhere, so consult a tax advisor. In short, Estonia's e-residency offers unparalleled flexibility and tax advantages for online businesses. It's ideal for freelancers, startups, and anyone looking to operate in the EU with minimal hassle.
So, which loophole shocked you the most? Let me know in the comments. If you enjoyed this video, don't forget to subscribe and hit the bell for more legal secrets every week. Remember, knowledge is power, but using it wisely is even more powerful. See you in the next one.